technical analysis with the 3 methods falling candlestick chart pattern, which can often make up a substantial portion of a downtrend. There can also be other features alongside the 3 methods falling pattern, such as the gap before it in this case, where the candlestick pattern does indeed make up the bulk of this drop. Sometimes the beginning and or end of a 3 methods falling pattern can be made up of multiple red candles instead of one single large red candle. This may even extend to incorporating 3 black crows price action. Something else to note with the middle portion of this example is the large bearish shooting star candle, which promptly resumes the downtrend after the natural pause, giving a slight variation to the normal structures we're used to seeing. And here's another variation of the 3 methods falling pattern in the middle portion that is also more bearish with a slight decline instead of the usual flat to slightly bullish phase. This is then followed by the shortest variation of the 3 methods falling pattern comprising of only 3 candles, one larger red candle at the beginning and one larger red candle at the end, with a relatively neutral candle, often a spinning top or doji variation for the middle candle. Later, the downtrend does continue, with some characteristics we've discussed before, such as elements of 3 black crows price action at the beginning or end, and a neutral to slightly bullish phase in the middle, resulting in a formation quite similar to a 3 methods falling pattern, but one that is slightly more neutral than usual since there is plenty of overlap between the ranges covered by the first, middle, and last phase of the pattern. That is further demonstrated by the relatively flat to slightly bearish movement before and after this formation. The following continuation of the downtrend is not quite a 3 methods falling pattern, especially with the middle portion, but it shares many similarities, especially near the beginning and end. On to the next chart example, with a fairly steady downtrend, containing plenty of that characteristic flat to slightly inclined movement found in between downward accelerations, forming the general price action of 3 methods falling patterns that's commonly intertwined with 3 black crows price action during sustained downtrends like this. And at the beginning of September, during one of those bearish accelerations, there's a good example where the drop is due to a gap down instead of larger red candles. This next chart begins with 3 black crows price action, immediately followed by a familiar flattening of price, which forms a pretty well-defined range within the boundary of the last red candle in the 3 black crows formation. And now with the return of stronger selling, a 3 methods falling pattern is likely, upon the break of the 1810 level defining the lower boundary and forming key short-term support for the middle portion of the potential pattern. Here it is, the decisive break lower, which also forms another smaller 3 methods falling pattern. That is, the more bearish variation with the middle portion having a noticeable decline. Over here, normal 3 black crows price action and a single larger red candle. Then in between them, what would normally be sharper bullish reversal candles, which in this case appear in more of a neutral to bearish background due to the ongoing downtrend and the high overlap between the real body ranges of these 2 candles that essentially combine to form a spinning top. So essentially a variation of these smaller 3 methods falling patterns that have less than 3 candles in the middle portion. A strong continuation here with similar features to 3 black crows price action. However, even with a large spike in selling volume for the final red candle, sentiment quickly changes in what first amounts to a large harami formation as the market shows more neutral to bullish sentiment, which steers to a more decisive uptrend once price begins closing above the high of the harami. In contrast, even though some haramis technically form here, there's the opposite situation where price quickly closes below their lows, to demonstrate continued bearish sentiment that is indicated by the resulting 3 methods falling patterns. Usually open, high, low, and close prices, especially from the first and last candles, can be used to reference support and resistance to define ranges, like in this case. This method can work quite well, especially when there's higher volume for the first and last candle, which does normally occur naturally since those are the main points where the bearish acceleration happens. Prices held in this range for quite a while, but even though there are some increases in selling volume, there is no break below the lower boundary, focusing around 1070. Instead, there's an inclined double bottom reversal upon the decisive break over 1170, defined by several consecutive closes over 1170. Later, this sharp drop halts around 1270, leading to the formation of a large harami. And as time goes on, it's leaning more neutral to bearish, with price remaining constantly near 1270 instead of moving higher. A few closes under 1270 and the downtrend moves further, but quickly there's a noticeable halt around 1210, delaying the downtrend, which is essentially made up mostly of this large-scale 3 methods falling pattern. If you could imagine a 3 methods falling pattern that is more vertically compressed, this would be it because the top and bottom are closer together, resulting in more overlap between the real bodies of the first and last candles. Interestingly, this is combined with the variation of the 3 methods falling pattern where the middle portion is declined, leading to price falling back down to and concentrating at 1170, where there's another instance of 3 methods falling price action where the real body ranges of the two larger red candles have more overlap. The downtrend continues with nothing new to highlight, nothing different from what we've seen before. So what's new and of interest here to pay attention to is this occurrence that's not too unusual, where a piercing pattern immediately forms after a 3 methods falling pattern to demonstrate one of the quickest ways to identify a sudden reversal of an established downtrend. Then as the market goes through another cycle of rising and falling, all those levels we marked earlier become useful for identifying obstacles to price movement, especially those that commonly take place closer to the middle of a 3 methods falling pattern. Finally, here's another good example where there's an immediate shift to bullish sentiment, strongly reversing the established downtrend right after a 3 methods falling pattern.